All right, good morning, TC Nation. Marco Iron Trader here. I haven't done it in a long time. I've been hella busy, but I want to do this real quick because I get a lot of questions from new subscribers, and today's an important day, and I'll show you why. I'm a big fan of Tastyworks, of course, and Tasty Trade. Happy Halloween, guys. So here's what's going on today and what I've been watching. So if you look, we'll go to the you can go to the grid page right here, go to notable stocks, and the market's closed right now, so this is a little pre-market peek before the market opens. But I'll just go to trade, look at QQQ. Okay, IV ranks 39. Here is SPY. Here is diamonds. IV rank is 28. If you're wondering what I'm talking about, this is your IV rank right here. Okay, what did I do? IWM 30. I'll go back to QQQ because I think it's the highest. Yep, QQQ. So not only is QQQ IV rank nice and high, but if you go to your table here, from here, and I'll collapse this. This is a standard options table that most people have seen. If you look, right here's what I'm looking at. The W stands for weekly options. I'm looking for normal expiring normal options, not weeklies, not quarterlies, and you can tell because there's nothing after the date. As you can see right, and these are the number of days to expiration when that option will expire. Today is the perfect, see right here, today is the perfect 45 days to expiration. This is the one you want to start trading. Okay, this gives you the highest probability to collect money if you're selling premium, and that's what I live for. Now, of course, it only happens once a month, but this is when you can start doing. If you're starting out, you can do a basic golden gecko. Now, disclosure, this is not how I personally trade. It's kind of how I started. So if you're new, that's kind of where I would start. And of course, I do things a lot differently now, but it's a good way if you're new to start off. So let me kind of show you what I'm looking at as far as pre-market peak wise. I don't usually use this table mode. I just did that to illustrate that there's the perfect 45 days left to expiration. I'm also always in curve mode for the most part. Now, some of you use, I came from the old Thinkorswim setup. So at the time, they owned the Thinkorswim. They sold it to TD Ameritrade, but they still use the platform. They wanted to do something great for the retail investors, so they launched Tastyworks. I prefer Tastyworks, but I still use, Thinkorswim for the charting for teaching. Other than that, I don't really use this. But take a look. Here's NASDAQ, right? And here's my 15-minute chart. I'll go to my daily chart, but here's the futures in NASDAQ, and you can see IV rank is 48.99 in the futures in NASDAQ. So one of the things I look for is I look at what happened pre-market or after hours. The light shaded area is pre-market. The dark is normal market trend. So I'm sorry, normal market hours. So what I usually do is when the market opens, I look to see if, for example, right here, I look to see if when the market opens, if it can go break above or below pre-market or after hours or previous days highs or lows. As you can see here, it went below this right here, and this is, every tick is 15 minutes, every bar is 15 minutes, and of course the market went down. And then so today I'm fast forwarding, and here's right, and here's after hours. I want to know if it could go above or below normal hours, and it didn't. It was kind of an inside day, and look, it couldn't go below here, and it couldn't go above here until towards the end, right about here, right? The last tick of the day kind of spiked higher. And then, of course, after hours, after that, it kept on going up. So, of course, I want to see when the market opens again, if it'll go break above or below pre-market hours highs. That it was already up here, so it's looking to be an update. So that's what I'm looking at. So fast forward for today. Now, look, here's what happened on Monday. High, low. Here's what happened after hours. It couldn't break above the high or below the low, but you can see here's where we are. In a couple more minutes, the market's going to open, and see, it's already above this last tick. It didn't go above this high right here, but That last tick ended up here. So I know it looks like it's supposed to, you know, it could trend to be an up day. Now, of course, what I would like to happen is I would like for it to go higher and then fail. And I want IV rank to drop. I mean, I want the market to drop, because when this happens, IV rank will go higher. Now, this is my 15-minute chart. I'm going to go to my daily chart. And this is / NASDAQ. And this is the futures for QQQ. So I'm going to zoom into right here, all right? All right, so see how IV rank popped? This is my IV rank chart. See how a few days ago we had this, and then we had this big drop. That's why the candle goes on this way, and IV rank popped up. I'll move this over so you can see. There we go. Got as high as, in the futures, and it was high as 70. And the very next day, right, what happened? IV rank just collapsed. Now, if the market does turn around and drop like that, IV rank will pop like this, and after that, of course, I want to sell it, because look, there's this nice IV rank collapse, and I can sell premium when it's high, and I can take profits when it drops. I'm going to zoom out just a little bit to give you guys some context, or I should say, give myself context, and I'll just kind of rambling off what goes into my head. So we're very overbought, as you can see from my charts right here. This is my OBB cross, so there are more buyers than sellers. It's kind of peaking out, so I'm hoping for it to turn down, but this is just a strong market, and it should average. This is my 233-day average right here. I'm kind of thinking it's got it. This is a big gap, I mean, but it's just been going and going and going. So my strategy has been working. The personal strategy I use now has been working very, very well. Of course, it's just that I wish IV rank was higher so I can collect more money. Well, what can you do? So now that and if you look at the trade page in, well, I'll change this to QQQ actually. Well, it doesn't matter, but you can see again, look, perfect 45 days, right? So these are the options I'm going to be trading today. And if you're starting, this will give you the best chance. So if you're brand new, here's what I would do. Well, one, get a Tasty Works account. It's free. In my channel right here, you can get a link, and here's a free link. It'll be below this video as well, and you can get Tasty Works for free. And if you're brand new, I probably look at what's the highest ETF. I'll start off with QQQ, and you want to go to click on strategies. You want to go to Iron Condor, and I have mine set as normal. Iron Condor is my default, 45 days to expiration, right? And 1 standard deviation. Click that. Oh, to be safe, let me go back. Hold on, go to strategies. See this? Unselect that. So that way, when you click on this, you'll get close to this 45 days expiration. See? And what this means is on December 15, 2017, this option expires, and that's 45 days from now. So 45 days expiration. And if you look inside the tiles, here's what I'm selling, and here's what I'm buying. See? But to be honest, this information is not as important to me as the percentages. So I click on this tile down here, and then it changes what's inside the tiles up here to percentages. What I want to do is I want to sell closest to 1 standard deviation out of the money, which is as close to 84% as I can get it. Okay. And what I'm looking at here is, see these white dashed vertical lines? That's 1 standard deviation away from the current stock price. So this line is 1 standard deviation below the current stock price, and this vertical line right here is 1 standard deviation above the current stock price. The current stock price is trading right here. So all I want to do is I want to get as close to that line as I can. And if it doesn't land on perfect, don't worry. That just means there's not a dollar, you know, an amount, not an amount, but a value closest to it. But the number I'm looking for is 84%. I'm trying to get close to 84%. All right. Now, on the top side, I want to buy closest to 2 standard deviations out of the money, which is this second further out white dashed line. See that? Below and above. So this one I want right there. So usually it'll say 2%. And here you go. Now this is a standard golden gecko. This is what I talked about in my free videos again. But this is a great way for you to start learning. All right. So here's what you want. This green area right here, I don't know if I can zoom this in without getting too wide, but okay, a little bit. Oh, it's a little bit too much. Oh, too much, sorry. See this green area right here? Here's where QQQ is trading right now. Here's how you read this. QQQ, IV rank is at 39. Here's its last price right here. Good liquidity. 150, 158. So on here's the prices, right? So right here is green dot, and it's not flashing or anything because the market's closed, right? It's pre-market right now. But 150, 158, that's right here. Now this green area, as long as QQQ stays inside this green shaded area between now, today, and in 45 days when this expires, okay, you make money. Now you see this tinted brown area right here? Based on this current IV implied volatility, that based on that math, this is the expected move, meaning based on the math, QQQ should stay inside this dark brown tinted area. So what are you betting? You're betting that it'll stay inside the green tinted area. So you have a 71% chance of making a profit. Now, if you click on that, and you can sell this for a net of $92. Why? Whenever you sell something, you're selling the bid price, and whenever you buy something, you're buying the ask price. So if I unclick this real quick, you'll see it right here. Like I'm selling this for close to $1, $99.50. I'm selling this for 26 bucks, but I also have to pay for this. So you add these two up, and you subtract these numbers right here, and that's how you get the net credit. You can also see the numbers down here, real close to anyway. Well, these are the strike prices, but anyway, so that's what you're gonna do. Now, so what I want to happen is I want this number to go down because as IV rank collapses, that's how you're gonna make money on the puts that you're selling. All right. The why you do this is basically because this is how you preserve capital, and you're minimizing the amount of your max loss. You're not protecting yourself from a max loss happening. You're just lowering that dollar amount. And again, I don't trade like this personally anymore. The way I personally trade is a little more advanced, is what I teach my private coaching clients. But this is how I first started off back in the day, and it works. It's okay. It's good. All right, but especially if you're getting your feet wet. All right, now if you click on this button, as you can see, I have a 88% chance of making 50% of my max profit. That's high. It'd probably be close to 90. It's just, I think the values are a little bit off. Usually it's like 89, 90% chance of making 50% of your max profit. I could probably collect more if I brought in, but I'll just leave it like that. 88. Okay, anyway. So that's what I did. Now this is a high, and now you want to take this off. There's a way to manage this as well, and doing this when it's 45 days to expiration gives you the highest probability of making money and not losing money. So this is one of the neat things you can do real quick. Now, if you're worried about direction, you can skew this. What that means is, let's say, oh, market is so strong. I think it'll easily blow past, it could go past 160. Could go higher, meaning I think the QQ could get higher than 160 at the end of 45 days, and I don't think it'll go lower. So if that's your opinion, now this right here is what's called neutral. You're just betting both sides equally, and you're basically neutral. If you don't want to be neutral and you want to enter in your own personal bias, go ahead and do that. See where it says strikes right here? You can actually shift this whole thing to the left, which is lower price-wise, or skew it to the right, which is higher in price-wise. So if you're of the opinion that, hey, maybe I think the market, or QQQ anyway, will go higher, has a better chance of going higher than lower, you can skew this higher like this, watch. See how it shifts everything over? Okay, so I'm bringing this in. See how the values change? All right, so you could skew this that way. Or you could, if you go more, I'm more bearish, I think the market's too overbought. I think the chances of QQQ going lower in the next 45 days is higher. So you can turn it back right over. Okay, because here's the standard deviation line, right? 68% of the time it'll stay within these two white vertical lines. So if you're neutral, that's kind of what you want to state. If you have a bias, you can do that. Or do half, watch. You can do only one half of them. So right now you're betting that the stock will stay in this green area. What if you just want to bet that the stock will go higher? So then you get rid of the call side and you just leave the put side on. So I can just double click this and delete that. Whoops, delete that. Double click this, delete that. Okay, or you can just, now it's a standard vertical, right? So now as long as the stock can go as high as you want and you make money. It just can't go below here. That's a standard vertical. This is basically a standard vertical. I can hit clear here, go to strategies, go to vertical, short put vertical, same settings, right? Click on this. Look, lo and behold, it pretty much sets it up for you. You just want to adjust this so it gets close to 84 and 2, or 2 and 84, and closest to these 1 standard deviation, and 2 standard deviation lines. Really simple. Of course, you're going to collect less because you're not selling, a call position. Your prop goes up, and if you take a look, I have a 91% chance of making 50% of my max profit. All right. So once you do a real quick pre-market peek, because it's a perfect 45 days to expiration. Tasting Asian, get your trade on, make some money. Private coaching clients, you know what to do. Today's a big day. Get on it, make some money. Any questions, hit me up on my website. The link is at the bottom here. There's a live chat feature. If you want to chat with me real quick, do that. Get more questions answered about the program, or just say hi. Have a great day. Happy Halloween.